The post-pandemic panic remains in effect for restaurants that managed to find a way to stay open and survive during the pandemic, but now are facing inflation, which is beefing up meat prices. According to a poll by Alignable Data, 72% of small restaurant owners worry that inflation could force them to shut down within the next 6 months. Now, as of April, the price of beef and veal products up by 14.3% year over year. Now, while in 44 U.S. states and 12 locations in Canada, the international gourmet burger chain Red Robin is hoping to turn a loyal customer base into a sustained period of prosperity. And the stock is doing just that at the moment. Joining us now in a Fox Business exclusive, Red Robin CEO Paul Murphy. Well, at least today. I mean, this is a massive gain here, Paul. You guys are jumping 27% at the moment. But let's tackle this right now regarding the cost situation. What are you facing? Because we're looking at labor costs, I guess in the first quarter, up more than 11%. That's a stunning number.
Mm-hmm. Yes, I'd say it's definitely an interesting time. In any typical year, either you're getting cost pressure or inflation against the food side of the business or the labor side of the business. And as you pointed out, it's really against both sides of the restaurant business. And we have been able to tap into our royalty members. We call our loyalty programs called Red Robin Loyalty. As you mentioned, it's 10.6 million strong out there. And through our really integrated and enhanced digital ecosystem, we've streamlined our ability to more effectively communicate with them. We launched a new loyalty platform at the end of 2021. We personalized our messaging with them so that when we're communicating with them, we're communicating in a way that they use Red Robin, that how they want to interact with us. So the messaging really is personalized to how they like interact with us, and that ability has really improved the number of engagements with the Red Robin brand, the trial, the frequency, the conversion, so we can get them in for their favorites. We can give them some discounting. We can help them out from a cost structure in their daily lives. I think it's a real crucial asset and advantage for the brand. Ours is one of the largest in the industry, and people are reacting very favorably to it.
Well, you finally got to what I was going to ask, which is, okay, communication's great, but what are you communicating? People want discounts. They want value right now. When we see what, as I said, costs for labor, how are you not translating this to a higher burger cost? And tell me how you're managing to maneuver around what are very serious inflationary pressures.
Well, we have a couple, I think, advantages for it. We have held our pricing down compared to a lot of other brands, but a real value driver for Red Robin is our whole bottomless concept. So, you know, we're doing these LTO promotions. We have the Risky River Backyard Barbecue today that's led by the Smokehouse Brisket Burger. But along with that, you receive bottomless fries. So there's a value component to almost every burger that we sell that I think offsets a little bit of the price that we're taking, offset the inflation on the burger side. And we're maintaining that. We're not taking that away from the customer. So it's bottomless on the fries, on the beverages. And so they see the true value of Red Robin. And as certainly as you can see through the earnings results of Q1 have stuck with us. Yeah, they think it's a very compelling value proposition.
Well, yes, and you're certainly not going to buy the stock at a high, even with the gain today. You guys are down about 33% year to date. It's been a very rough 6 months and a full year, not just for you, but how do you foresee this really starting to turn around for the stock beyond today?
Well, honestly, I believe that the inflation in Q2 will be somewhat similar to Q1, but I also see that moderating as we move through the back half to the mid-single digits as we get to the back half of 22 into 23. And I think that's also going to put a little bit more discretionary income back into people's pockets. And quite honestly, it's maintaining that price structure to In fact, I think Red Robin have the ability to steal market share
Gotcha.
from other brands due to our PPA. It's much lower than a lot of others in the casual dining segment, and part of that's by choice. We want people to see and feel the value of Red Robin, and I think that'll translate not only into the business results, but into the stock price as we move forward.
Paul, listen, bottomless fries, you had me at hello. So that I do think is very good value. Thank you very much. Paul Murphy of Red Robin.